If people don't have cash and they can't go to the ATM and the banks don't work and everything is controlled by computers and the computer system is down and you can't get money, then how are people going to trade? And I'm thinking, well, this is why I have.
You're watching Silver News Daily. Subscribe for more. Did you know that silver is poised to skyrocket to an astonishing $1,000 per ounce in the near future? Yes, you heard that right. Experts like Repo and the legendary investor Jim Rogers are sounding the alarm on what could be the investment opportunity of a lifetime. Silver, often overshadowed by gold, is now emerging as a powerhouse, especially given its current price, which is down 40% from its all-time high. This significant drop presents a prime buying opportunity that savvy investors can't afford to miss. But why now, you might wonder? Several factors are converging to create the perfect storm for a silver surge. For one, the Federal Reserve is seriously considering rate cuts, a move that historically has bolstered the appeal of precious metals. As interest rates drop, the opportunity cost of holding non-yielding assets like silver decreases, making it more attractive to investors seeking safe havens amid economic uncertainty. Moreover, the current market sentiment around silver is exceptionally bullish. Silver has been stabilizing around $31 per ounce, showing strong resilience and indicating a robust upward momentum. Technical analysts are pointing to several bullish signals that suggest a significant price increase is on the horizon. In today's video, we're going to delve deep into these insights and more. We'll explore why Jim Rogers believes silver is a better investment than gold right now, and how Repo's analysis supports the prediction of silver reaching $1,000 per ounce. We'll break down the technical trends, examine historical contexts where silver experienced dramatic surges, and look at the various market forces at play that could propel silver prices to new heights. Stay tuned, because by the end of this video, you'll have a comprehensive understanding of why now is the perfect time to invest in silver. We'll equip you with the knowledge to make informed decisions and potentially capitalize on what could be one of the biggest financial opportunities of our time. Trust me, you won't want to miss this. Your future wealth could depend on it.
Yeah. I'm not seeing much yet, but look, I had to pick up my 5-year-old daughter from her kindergarten in the middle of a missile attack. Now, it's not like I'm like literally under fire and dodging explosions. I'm carrying my daughter, and it's quicker for me to walk, because otherwise I have to go around and then put her in the car, and then so it's close enough that it's quick for me to walk, but still I'm outside and carrying her and kind of jogging and just trying to calm her down while trying to calm myself down, and nothing happened. But it's emotionally it's a toll. I can't deny that, and I'm okay, and she's okay. But we have to contemplate leaving if there's going to be thousands of missiles here a day. Is it even going to be safer down south? And I have friends who've offered to house us down south for an indefinite period of time if that's required. But then again, and I have to consider, if I'm doing that, am I giving into a plot to strengthen the 15-minute city plan? I mean, I don't know if I'm going to take that seriously. I don't go that deep into the rabbit hole. Some people do, and okay, but I don't know what's better to do. So these are just the considerations, and when it comes down to it, you got to hunker down and act. And the other thing is there's not that many roads that go down south, and they're not very thick. It's not like an interstate. It's not like I-95 with 6 lanes both directions, right? It's like two-lane roads, or at most 4 or 6 lane roads at most, right? So if everyone decides to evacuate at the same time, nobody's going anywhere, and I got to consider that. So should I evacuate now before there's a pandemonium, or should I just wait here and then just get stuck here, and which will be okay because I live here and I know where the water is, but then okay, I'm going to be stuck. It just keeps cycling through.
Let's take a closer look at the
part of
current
endgame
market
living, I
sentiments
guess.
surrounding
Everybody's
Right now, silver is trading at around $31 per ounce, which is a significant rebound from its recent lows. This recovery has caught the attention of investors and market analysts alike, sparking a wave of optimism about silver's potential. One of the key voices in this discussion is the legendary investor Jim Rogers. Known for his insightful market predictions and investment acumen, Rogers has been vocal about his preference for silver over gold at this moment. He points out that silver, unlike gold, is still significantly below its all-time high, down about 40%. This makes silver a much more attractive buy for those looking for undervalued assets with high upside potential. Rogers emphasizes that he prefers to invest in assets that are down and out rather than those at their peak. In his recent statements, he highlighted silver as one of the best investments currently available, given its depressed price and potential for significant gains. This perspective aligns with his broader investment philosophy of buying low and selling high, which has guided him successfully through decades of market cycles. The bullish sentiment doesn't end with Jim Rogers. Market analysts are observing that silver's price stabilization around $31 indicates strong support at this level, suggesting limited downside risk. This stability, coupled with a positive outlook for precious metals, creates a favorable environment for silver investors. Additionally, the Federal Reserve's monetary policy is playing a crucial role in shaping market sentiment. With increasing speculation about upcoming rate cuts, the dollar's strength is expected to wane, further boosting the appeal of silver and other non-yielding assets. Lower interest rates generally decrease the opportunity cost of holding precious metals, making them more attractive as safe haven investments. In summary, the market sentiment around silver is extremely positive, driven by influential voices like Jim Rogers and supportive macroeconomic factors. This convergence of expert opinion and favorable conditions suggests that now could be the ideal time to invest in silver, as it shows strong potential for significant appreciation in value.
Had me consider paths that are obvious that I didn't really look at so deeply because they just don't come to mind until they're imminent. So what's happening here, just not to get into any political interpretations or anything, or any military interpretations of what's going on, there are rockets falling in in northern cities all over Israel's north, and not a disputed border or anything. It's just they keep shooting rockets at people and blowing things up. And if they don't hit cities, I don't know if they're not hitting them on purpose or they can't, or to what degree their missiles are accurate or have the ability for accuracy. It's summer. It's like 100 degrees everywhere. And the north is actually hotter than the middle of the country. It's counterintuitive, but it's true. So if they hit an open field, then the cities nearby are threatened with fire, and you can burn down a whole city that way. So it doesn't even matter if they hit anything directly; they will cause fires. And ironically, the Iron Dome system, which is meant to explode missiles in the air and keep them from hitting, it spreads out the fire to a a wider area and makes the fires even more difficult to handle when the missiles actually fall. So we've had to deal with that. We haven't had direct hits in the city. We've had shrapnel hit once the rockets have been neutralized in the air, and shrapnel falls places and it hits things and it can kill people. And there's a lot of the area around my city has been burned, which is scary, but it's also good because theoretically, if everything around the city is burned in circumference of it, then the fires can't spread in, right? It's like fighting fire with fire. So yeah, that's what's happening, and it seems, at least the media is telling me, and I don't know if they're lying or playing on the same team with Hezbollah. Who knows? I wouldn't put anything past these people anymore from what I've seen since 2020. It seems that Israel's going to invade within the next few days. Either that.
Now let's delve into the role of the Federal Reserve and its potential rate cuts, which are pivotal in driving silver's bullish trends. The Federal Reserve, or the Fed, has a significant influence on the financial markets, and its monetary policy decisions can dramatically impact the prices of precious metals, including silver. Currently, the Fed is considering rate cuts, a move that has historically been very supportive of rising silver prices. Why is this the case? When the Fed cuts interest rates, it typically leads to a weaker dollar. A weaker dollar makes commodities priced in dollars, like silver, cheaper for investors holding other currencies. This increased demand can drive up the price of silver. But there's more to it. Lower interest rates also reduce the yield on interest-bearing assets such as bonds. As a result, investors often seek out alternative investments that do not yield interest, such as precious metals. Silver, being one of these non-yielding assets, becomes more attractive. This shift in investor behavior can lead to significant inflows of capital into the silver market, pushing prices higher. Furthermore, the anticipation of these rate cuts is already having an effect. Market participants are betting on a high probability of the Fed cutting rates soon, as indicated by tools like the CME FedWatch, which shows a 77% chance of rate cuts in September. This growing speculation is putting pressure on U.S. Treasury yields, causing them to fall. Lower yields decrease the opportunity cost of holding silver, reinforcing
out of something while you were asking the previous question, and that also has to do with power outages. We're talking about open interest and gold and GLD and gold futures. Like, if electricity is down and the internet's down, I'm not going to be able to buy and sell my positions. I won't know what the international gold price is. I won't be able to call my broker and say, sell this, or check on my gold stocks or buy if there's a dip. I'm not going to be able to do any of that. And who knows when I will be able to and what situation I'll be in then. So, we could talk about gold derivatives for all you want, but like, when push comes to shove, you need something in your hand to give to somebody else if you want to buy food. It's really that simple. I'm not saying it's all going to be like that, but when bombs are flying over your head, you get really physical fast, and you stop thinking about, okay, well, there's a bomb on my head. What's the price of GLD? It's not something that you think about anymore. Really, the most important thing is, again, to stay calm and to keep your head together. And I guess when I was running with my daughter, carrying her when there's a siren, trying not to freak out, and then thinking about what happens if there's a power outage, really the most comforting thing in an immediate sense is that I have extra water, right? If the water goes out and I'm thirsty and it's 100 degrees outside, and I don't have extra water and I just have what's in my fridge, I'm going to start losing my emotional balance and my family's going to freak out. So I have a bunch of water. And then I can think about food, later. But I have some food also, but like, have some water. that. And then you won't freak out when some power outage happens and you don't.
To further understand silver's potential, we need to delve into the insights of renowned experts like Jim Rogers and Rafe Farber. Their analyses provide compelling reasons for why silver could be on the brink of a substantial price increase. Jim Rogers, a legendary investor with a keen eye for undervalued assets, has recently emphasized his preference for silver over gold. Rogers points out that silver is still down about 40% from its all-time high, making it a more attractive buy compared to gold, which is near its peak. According to Rogers, this significant discount presents a golden opportunity for investors looking to capitalize on silver's potential upside. He believes that silver's current price does not reflect its true value, especially considering its essential role in various industrial applications, which are expected to grow. Rafe Farber, another respected market analyst, echoes this sentiment. Farber's analysis highlights several factors contributing to silver's bullish outlook. Firstly, he notes that silver's historical price patterns suggest a cyclical nature, where significant dips are often followed by substantial surges. He points out that the current stabilization around $31 is a strong indicator of robust support, making further declines less likely and paving the way for a potential rally. Farber also emphasizes the impact of macroeconomic trends on silver. He explains that the ongoing monetary easing by central banks, including the Federal Reserve's potential rate cuts, creates a favorable environment for precious metals. As fiat currencies lose value due to inflation and low interest rates, investors seek refuge in tangible assets like silver, which historically retains value better than paper currencies. Both Rogers and Farber stress the importance of timing and investments. With silver currently undervalued and key economic indicators pointing towards a bullish trend, they argue that now is an opportune moment to invest. Farber specifically mentions the industrial demand for silver, which is expected to rise with advancements in technology and renewable energy sectors. This increased demand, coupled with limited supply, could drive silver prices significantly higher. In essence, the expert opinions of Jim Rogers and Rafe Farber provide a solid foundation for the optimistic outlook on silver. They underline the importance of recognizing undervalued assets and timing the market effectively. Their analyses suggest that silver's current market conditions are ripe for a significant surge, potentially reaching the much-anticipated $1,000 per ounce mark. By understanding and leveraging these insights, investors can position themselves to benefit from silver's promising future.
Market. So usually, when we have a local high in open interest, that means that the speculative fuel has been spent, and there's not that much room to go higher until we have a pullback to set the open interest back down. So the high at this cycle was something like 540,000, and I think we hit a low of 430,000. I think the high was in early to mid May, if I'm not mistaken, and now we're in late June, so it was about 4 or 5 weeks ago, and so we're down like 110,000 contracts. When open interest goes down, what it means is that usually the bullion banks or the swaps, they're theoretically, I don't know if they actually do this, but theoretically they short the futures market and then they buy physical gold supposedly in London to hedge that out so their books are balanced, so they don't theoretically care where gold goes up or down. Now we could debate about whether they're actually long the physical, or even if they are long the physical, does the physical actually exist in London? And I guess that's only something we'll find out in the end game when these things have to cover, and some of them will and some of them won't, and then we'll be at a default situation. So that's a question that's yet to be answered definitively. But what we have seen is that 110,000 contracts have been closed, which means short positions have been bought back. And that means that more cash is available, at least in the gold market, for people who trade it back and forth, for the price to go up again. It doesn't mean that the turn's going to be right now, although if you look at the price action today, maybe it was. I mean, I think last time I checked, it was up 1.2% gold, and silver is up about 4%. So maybe it was today. And the all-time record in open interest was something like 800,000, and that was at the eve of the lockdown crisis of 2020. And there's a whole bunch of theories as to why it went to 800,000 when we only see a high of 540,000. And during the strongest portion of the gold bull market until 2011, I think the highs were around 550,000, around what the highs hit recently. And so the reset down to 430,000 is like the low that we got in the last 5 years was 400,000. That was right before the recent rally, I think just a few months ago. And if we can go back, if we can go that low, it'd be even better. It would mean the price would have to be reset even lower probably. But 430,000 is a good number, and it means that I don't think that price can go much lower from here before the next rally starts. In terms of time, could take a few more weeks. It could be now, but you got to be ready for either one.
Now let's dive into the technical analysis of silver's price trends, which provides a strong indication of its bullish potential. Currently, silver has been stabilizing around $31 per ounce, a level that has shown significant support and resilience. This stability is a critical factor that analysts use to predict future price movements. Technical analysis involves studying historical price data and chart patterns to forecast future price movements. For silver, one of the key patterns observed recently is the breakout of the falling channel formation. This pattern typically indicates a reversal from a downtrend to an uptrend, signaling a positive shift in market sentiment. The upward-sloping 20-day exponential moving average, EMA, at $30.70 is another bullish indicator. The EMA is a trend-following indicator that smooths out price data to create a single flowing line, making it easier to identify the direction of the trend. An upward-sloping EMA suggests that the short-term price trend is on the rise, supporting the case for a bullish outlook. Furthermore, the 14-period Relative Strength Index, RSI, has shifted into the bullish range of 60.00 to 80.00. The RSI measures the speed and change of price movements, and a value above 70 typically indicates that an asset is overbought, while a value below 30 indicates it is oversold. In silver's case, the RSI in the bullish range signifies strong upward momentum and increased buying pressure. The positive scenario is also reinforced by silver's ability to close above the $31 mark, which has been a critical resistance level. Closing above this level indicates strong buying interest and the potential for further gains. The next targets for silver, as projected by technical analysts, are $31.50 and $32, which represent the next positive stations on its upward trajectory. Analysts also highlight the significance of the support level at $30.06. As long as silver remains above this support, the bullish trend is expected to continue. Breaking below this level could put the price under negative pressure, but given the current market dynamics and technical indicators, such a scenario seems less likely. In summary, the technical analysis of silver points to a bullish trend supported by key indicators like the EMA, RSI, and price patterns. The stabilization around $31 and the breakout from the falling channel formation suggests that silver is poised for further gains. Investors looking for a reliable indicator of silver's future performance can take confidence in these technical signals, which reinforce the optimistic outlook for silver's price.
The repocalypse was back in September 2019, when there wasn't enough spare dollars to do overnight bank loans for banks that needed to close their books for the day within regulatory standards. Exactly what it was, nobody knows, but that's what happened. So what was happening in 2019, among other things, was that a lot of this repo money was being used to fund basis trades. Basis trades are when hedge funds sell future short and buy spot in the same contract and then profit off the difference. And the spread is usually like a few cents. So they borrow huge amounts of money. And how are you going to make a few cents into a lot of money? You do a lot of it at a time. And in order to do a lot of it at a time, you have to borrow a lot of money. And there's a lot of money in the repo market, so they borrow that money overnight. They use it to fund their short positions in futures, and then they buy the spot, and then they profit, and then they borrow the money again the next night. So that saturates the repo market, right? It's being used not necessarily for banks that need the cash to close regulatory standards. According to regulatory standards, it's being used by hedge funds, right, to profit, to collect pennies in front of a steamroller, proverbially, as the saying goes. So now we're seeing in September 2019 they spiked. The basis trade got really popular in different notes. I think it was 2 year notes, whatever maturity is, doesn't matter. So now that same thing is happening again, with the basis trade in I think it's in the 5-year and the 2-year note simultaneously, and there's these record amount of short positions, and those are being funded through the repo market, just like in 2019. At the same time, you have QT ongoing. Maybe it's slowed down. We haven't seen it slowed down yet consistently, but they said they were going to slow it down in June. But still, slow it down. It's still QT means there's fewer dollars left to as a monetary base to turn into high-powered money. So there's going to be fewer reserves, fewer dollars available. And at the same time, the basis trade is growing, and it's at new record heights. So you have more and more hedge funds borrowing from the repo market, fewer and fewer dollars available because the Fed is continuing quantitative tightening. I ran this chart. I configured a chart where I looked at the amount of repos as a proportion of the total reserves available in the banking system. And what I came up with was during the repocalypse, 87% in September 2019, 87% of the available reserves in the banking system were being used for repos, right? I think we're at something like 60, maybe 61%, something like that now. So we're not at red alert quite yet, but reserves keep falling, and the volume in the repo market is consistently touching $2 trillion and slowly moving up from there. And at some point, these numbers are not going to work out. There's not going to be enough money to fund all the basis trades, plus loan to all the banks that need the money. And then there's going to be a repo crash, and rates are going to go up to like whatever they went up to in 2019. Like it was like 8, 9, 10%, whatever it was. And the Fed's going to have to step in. This is just a mathematical certainty. You know, it's two trains on the same track heading in opposite directions.
To fully grasp silver's potential for a dramatic surge, it's crucial to look at historical contexts where silver experienced significant price increases. By examining past trends, we can better understand the factors that drive silver's value and why the current market conditions are primed for a similar rally. Historically, silver has exhibited a cyclical nature, with periods of sharp price increases often following substantial declines. One notable instance occurred during the late 1970s and early 1980s when silver prices skyrocketed from around $6 per ounce to nearly $50 per ounce. This surge was driven by a combination of high inflation, geopolitical tensions, and a strong demand for silver in industrial applications. Investors sought silver as a hedge against economic instability, driving its price to record highs. Another significant surge took place in the early 2010s, where silver prices jumped from around $18 per ounce in 2009 to nearly $50 per ounce in 2011. This rally was fueled by a similar set of factors. Economic uncertainty following the 2008 financial crisis increased demand for physical silver and speculative buying. The financial crisis led to a loss of confidence in traditional financial instruments, pushing investors towards precious metals like silver. Currently, we see parallels between these historical surges and today's market conditions. The global economy is once again facing uncertainty, this time due to inflationary pressures, potential interest rate cuts, and ongoing geopolitical tensions. As in the past, investors are turning to silver as a safe haven asset to protect against these economic uncertainties. Moreover, the industrial demand for silver continues to grow, driven by advancements in technology and renewable energy sectors. Silver's unique properties make it indispensable in various industrial applications, from solar panels to electronic devices. This sustained demand adds another layer of support to silver's bullish outlook. The current price stabilization around $31 per ounce, coupled with positive technical indicators, mirrors the conditions seen during previous rallies. Analysts believe that this stability sets the stage for a significant upward movement, similar to those historical surges. In addition to these parallels, today's market has the added influence of digital trading platforms and global connectivity, allowing information and market sentiment to spread rapidly. This can amplify price movements as more investors gain access to silver markets and act on bullish signals. In summary, by understanding silver's historical price patterns and the factors that drove past surges, we can see why the current market conditions are ripe for a similar rally. The combination of economic uncertainty, growing industrial demand, and positive technical indicators suggests that silver is poised for a substantial increase in value, potentially reaching the much-anticipated $1,000 per ounce mark.
Or somebody's going to get Hezbollah under control because, regardless of what you think of Israel, and it doesn't really matter to me, a country can't have its cities being bombed every day. It's just not. It's not a thing that you can handle. It's not, even libertarians will admit, at least minarchist libertarians, that the role of government is to defend its citizens. So that's just where it is. In terms of preparedness, I'll just give one example. Aside from just stocking more food and water, right, in case something happens, there was an argument between a public spat between the energy minister, the politician in charge of energy infrastructure, and the guy actually in charge of the monopolistic company that is the Israel Electric Company, that is supposed to report to the Israeli government on what the situation with the grid is. So he comes on the news today and he says, our grid sucks. Hezbollah can take it out very, very easily. We're not prepared for war, and we haven't done anything serious to prepare for it. And if the electricity is down for 3 days, there's going to be chaos in this country. And I'm thinking, well, I could survive electricity without 3 days of electricity. But then I'm thinking, well, yeah, I have cash, I have silver coins. If people don't have cash and they can't go to the ATM and the banks don't work and everything is controlled by computers and the computer system is down and you can't get money, then how are people going to trade? And I'm thinking, well, this is why I have silver in my house. What's one of the reasons. I wasn't thinking because there's going to be a power outage. I'm thinking more of the dollar dies and the dollar exchange rate to gold goes to like 50,000, and then there's dollars and there's electricity, but it's not, you can't buy anything with a dollar. But I'm thinking now more urgently, okay, well, what if there still is a dollar and the shekel still theoretically exists, but nobody can get one? So that's another thing. It's not that I never thought of this before. It's that now I'm dealing with the actual possibility that this might happen, and I'm going to have to buy things with real money, or at least cash, or both. And how long does cash last? And how long is there going to be power outages? And who's right? Is it the politician who's saying to the head of the electric company, shut up and don't panic the public? Or is it the head of the electricity company himself who's right that Hezbollah can take out the electrical grid and we're all going to freak out? I don't know who's telling the truth. Israel's full of a bunch of liars and they're all incompetent. And I don't know who's in charge of this country. And it's the same thing with America. Who's in charge of America? Nobody knows. Who are you gonna It's the same. It's just worse here. That's the thing.
Let's examine the various market forces and catalysts that could drive silver prices significantly higher in the near future. Understanding these factors will help us appreciate why experts are so optimistic about silver's potential. Firstly, one of the most significant catalysts is the anticipated Federal Reserve rate cuts. The Fed's decision to lower interest rates can have a profound impact on the silver market. Lower interest rates typically lead to a weaker dollar, which makes silver more affordable for international buyers and can increase demand. Additionally, lower yields on interest-bearing assets like bonds make non-yielding assets, such as silver, more attractive to investors seeking better returns. Secondly, geopolitical tensions and economic instability play a crucial role in boosting silver prices. In times of uncertainty, investors flock to safe haven assets to protect their wealth. Silver, along with gold, has long been considered a refuge during economic downturns and geopolitical conflicts. Current global tensions, whether in the form of trade disputes, military conflicts, or political instability, add to the allure of silver as a safe investment. Thirdly, the industrial demand for silver is on the rise. Silver is a critical component in various high-tech industries, including electronics, solar energy, and medical applications. The push towards renewable energy sources, particularly solar power, has significantly increased the demand for silver. Solar panels, which require silver for their photovoltaic cells, are a major growth area. As the world moves towards greener technologies, the industrial demand for silver is expected to continue its upward trajectory. Another factor driving silver's potential is the supply constraints. Unlike gold, silver is consumed in industrial processes, and a significant portion of mined silver is not recoverable. This consumption, coupled with limited new mining projects, restricts the available supply of silver. When demand increases, as we are currently witnessing, the limited supply can lead to sharp price increases. Furthermore, investor sentiment and market speculation can amplify silver's price movements. As more investors recognize silver's potential and move their capital into the metal, this influx of investment can drive prices higher. Market speculation, fueled by bullish predictions and positive technical indicators, can create a self-reinforcing cycle of rising prices. Lastly, advancements in financial technology have made silver more accessible to a broader range of investors. Digital trading platforms and silver-backed exchange-traded funds, ETFs, allow for easier and more efficient investment in silver. This increased accessibility can lead to higher demand as more investors include silver in their portfolios. In summary, a combination of Federal Reserve rate cuts, geopolitical tensions, rising industrial demand, supply constraints, positive investor sentiment, and advancements in financial technology are all converging to create a perfect storm for silver. These market forces and catalysts strongly suggest that silver is poised for a dramatic increase in value, potentially reaching the $1,000 per ounce milestone that experts like Jim Rogers and Rafa Farber predict.
But a CBDC is just it's another derivative of the dollar. A reset, you can use that word. That's another word they took from us, right? They keep taking our words. So a reset is a good thing. What they mean by reset is building another layer of the pyramid so they can control us. The higher we are in that pyramid, the more that they control us. The reset would be clearing out the pyramid and starting at ground level again, which is you'd clear out all the derivatives on that are based on gold and silver, and then you start over the monetary organizational system. Now, I want to calm you down a little bit. Calm the audience down a little bit, the listeners. And that doesn't mean that we're going to destroy all the capital in the world and that we're all going to go back to the Stone Age and we're just, we're going to be living in huts. That doesn't mean, in a financial reset, nothing physical is destroyed. In a war, things are destroyed. And sometimes you can have war with the financial reset. That does happen sometimes, but it doesn't necessarily happen, right? And the way that I like to think about it, or the way that calms me down, and the way I think is correct, is that what fuels war is money. Right? You need money for war. War is expensive. So in order to conduct World War II, Germany, the Nazis, what they did was they took over. They just went in and they pillaged countries and they took their gold and they used that gold to spend on their war effort. So you can't have war if you're broke, right? War means you have to spend money. So when we're talking about a reset, we're talking about a financial reset. And a financial reset just means you have to determine who owns what part of the capital that exists in the world. And it's gonna be very disruptive because for a while you're not gonna know who's gonna own what. But the point is that we're gonna have to go back to the base of the pyramid, and then the people with the real money are going to be able to buy the most, and then hire the people and start production again. And from there, gold and silver will stabilize the system. And instead of a tiny, tiny little base, like a very thick, tiny base of gold supporting a huge pyramid, you have a very broad, spread out new base of a much more stable building, right? and then it makes financial life a lot more stable. The reset is a good thing. And I really don't think we have to worry about CBDCs much, because absolute power is not possible. You can't have a government that controls the prices of everything all the time. It's like that saying, you can fool some of the people all the time and all the people some of the time, but not all the people all the time. Who said that? One of the president, was it Kennedy? I don't know. No, probably not, but we'll look it up later. Like the nightmare in people's heads that the government is going to issue a CBDC and control prices forever is impossible, right? Price controls never work. That's like a libertarian slogan. We all know this. So if price controls never work, CBDCs will never work either. It's just a corollary of that. Not that they aren't trying. I'm not saying that they're not trying to take over the world and that they're not, trying absolute power. They are, but absolute power is impossible. And you have to comfort yourself in knowing that that's just the way the world works, and don't freak out in despair that they're going to win, because they can't.
With all the pieces in place, we can now see why silver is set to experience a dramatic surge to $1,000 per ounce. The convergence of factors we discussed builds a compelling case for why this precious metal is on the brink of a substantial price increase. Firstly, the Federal Reserve's potential rate cuts are set to weaken the dollar, historically a powerful driver of higher silver prices. A weaker dollar makes silver more attractive to international buyers, increasing demand and driving up prices. This monetary policy shift, coupled with lower interest rates, enhances silver's appeal as an investment, as the opportunity cost of holding non-yielding assets decreases. Secondly, economic and geopolitical uncertainties are pushing investors towards safe haven assets like silver. With inflation concerns, market volatility, and geopolitical tensions, silver is seen as a reliable store of value. This growing demand for stability in uncertain times further strengthens the bullish outlook for silver. Thirdly, the rising industrial demand for silver cannot be overstated. Silver's critical role in high-tech industries, particularly in the renewable energy sector, ensures sustained and increasing demand. As the world transitions to greener technologies, the need for silver in products like solar panels will continue to grow, tightening supply and supporting higher prices. Supply constraints add another layer of bullish sentiment. Unlike gold, silver is consumed in various industrial processes, leading to a reduction in available supply. With limited new mining projects, this consumption-driven depletion restricts supply, creating a scenario where increased demand significantly boosts prices. Investor sentiment and market speculation are also crucial. Influential voices like Jim Rogers and Rafi Farber highlight silver's undervaluation and potential for substantial gains. Their insights, combined with positive technical indicators such as the bullish trends observed around the $31 per ounce level, fuel a cycle of optimism and investment inflows that drive prices higher. Furthermore, the accessibility of silver through digital trading platforms and silver-backed ETFs opens the market to a broader range of investors. This increased participation can amplify price movements as more capital flows into silver investments. In conclusion, the combination of monetary policy shifts, economic and geopolitical uncertainties, rising industrial demand, supply constraints, positive investor sentiment, and increased accessibility all point to a dramatic surge in silver prices. The analysis and insights provided by experts like Jim Rogers and Rafi Farber underline the strong potential for silver to reach the $1,000 per ounce mark. Now is the ideal time to consider investing in silver, as it stands on the cusp of a significant upward trend. Remember to subscribe to our channel for more insights and updates, and always consult with a financial advisor before making investment decisions. This is not financial advice, but a synthesis of expert analysis and market trends pointing towards a promising future for silver.